Hey guys, how you doing today? Haven't done video in a while, so I figured I'll do one now. I've been busy, but I've been watching a lot of your videos and also watching a lot of the news on the economy and everything, right? Including the elections. So one of the things I wanted to ask myself was, is there a bubble in the economy, right? And will there be a burst of some kind of this bubble in 2016? So let me go and switch over to a Dow Jones Industrial chart here, which gives you roughly, I don't know, 30 years from 1988 on to 2016, okay? So for the most part, in the beginning of the 90s, it's relatively quiet. The markets, grew gradually, and right around when the internet started to really take off, it changed everything with digital economy and everything. So you started to see the rise of computers and anything internet related, and it's gone up from 1995 to say, around here, 2000, 2001, over here was its peak, and we all pretty much assign this as what's called the .com bubble, like everybody labels it as .com. Okay, so then we had 9/11, and a lot of markets started to spook, and it started to go down. The bubble burst, and it went down from here to here, which wasn't too bad, but it's still, people lost a lot of money. And we went through the war, and the war started to allow the economy to get back up on its feet again. But in 2007, or shall we say 2007, 2008, around there, it started to peak. And in this gradual incline, or pretty steep incline, is called the real estate bubble, with mortgage-backed securities and credit default swaps, and that crashed the economy big time. This was really bad. Look at the way in which the market crashed. It's very, very hard. And it started from 2007 and all the way into the first months of 2008, 2009, right? So this was called the real estate bubble. I would highly recommend for you guys to watch the movie Big Short, The Big Short. You can buy it on DVD, or if you have Amazon Prime, or however you want to watch it, it's available, and you can watch it so that it explains exactly what this was about and what this bubble was about, and how people were going crazy with, real estate, and those who knew that was coming and tried to profit from it on the way down. And that is why the movie is called The Big Short. The movie basically makes it easy for the average person to understand how these things were working, what kind of financial products they were dealing with. So it will give you a better understanding of what happened here, and the criminality that's involved with, such bubbles here. So now we have this steep, big incline in the last, say 8 years, 7, 8 years, right? So it's been a longer bull run than any of these over here. This was from 2002 to 2007. That's 5 years. And over here you have 95 to, say, this was the peak here at 91, I mean the 99. But it's been like maybe 5 to, let's just say 6, 7 years here. But this one's 7 years, and it's getting pretty high up there. We did have a little bit of a spook here earlier in January, so let me get to that now. And the question I pose to you guys is, you see this incline here, and we're all the way at the top here. What bubble are we in? That's the first question. If you guys have any ideas, comment down below. I will give you my answer at the end of the video. Okay. All right, so now I'm at a 1 year chart, and I was mentioning about the spook we had in the beginning of the year when the Dow was at 17.7, right around the levels that we're at now, it spooked and we went down to as low as let's say 15.6, okay, 15,600 on the Dow Jones. So while this downturn was happening, the markets were spooked, and it says sell everything, dire warning from Royal Bank of Scotland as fears mount that markets are set for a new crash and oil could plunge to $10 a barrel. So it was really a scary sentiment in the beginning of the year, okay? All right, so a couple months later, Jim Rogers comes out and says there's a 100% probability of a U.S. recession within 1 year, right? Or within the year. And let me just scroll down here so you can see what he's trying to say. He says, why I am out of the yen and long the dollar. I will put a link to this video if you guys want to see it, or a link to the site. He basically talks about how he wants to own dollars because a lot of the world governments outside, you know, internationally, whether it be Europe or Asia, are going to have their currency debased. And if there is a market downturn globally in Asia and Europe, United States is going to look like the safe haven, so the money will rotate it into the US dollar. That's his forecast for what's going to happen. Now, the flip side to the story here is that the establishment and the banking industry and everything, I guess they're, you know, working together to make it look like we're okay, even though the markets have pulled back. And this is back in January. Barack Obama had a State of the Union address. I guess this would be his last one, saying that, you know, the U.S. economy is strong, the most durable economy in the world, right? And for the month of February, the U.S. Job market added 242,000 jobs. So this looked good in the eyes of the market analysts. And the March jobs data was also around over 200,000. This one was 215,000, which is a little bit less than February, but market analysts thought this was pretty good, or decent at least, right? So while this was all happening, the ECB with Mario Draghi decides to print more money. They don't say here, but I think it was around 80 billion euros per month, I think. And then they were going to further lower the negative interest rates. Whatever it was, it's going to be lower. So that gave liquidity to the markets, I guess, and that's why we're up. So right around the time they announced it, you see it go, the market's going back up to where it was. So where do we go from here, right? Could it go further higher, which that's what I'm thinking. It might go higher again, maybe back to the 18,000 level. We'll see about that. And we come to the question that I also wanted to ask. Will gold and silver rise or fall, or maybe stay the same if the bubble bursts? Okay. So let me get to the bubbles that I think that are currently in the markets. I think it's obvious to say that we are in a global debt bubble. Okay, that's one. All right. And the second bubble is excessive QE, right? Or just printing of money. But the last one that may not be obvious is what's called a credit bubble. Okay, so these are some of the bubbles that I see driving the markets up the way they are currently. A lot of people don't really know what the bubble is until after it bursts, right? So these are some of the things that I see. Credit bubble basically means, you know, financial institutions giving, just like a credit card, right? Like when you swipe one, they give you a certain amount for credit. You can spend, there's a spending limit. So you're basically creating a vehicle which allows you to spend without actually having the money. And if that gets bigger and bigger and bigger and bigger, and people are using it more and more and more, and what if you can't pay it back? Okay, so that's credit bubble, right? And then I'm sure there's other bubbles out there that that's in the economy right now that I don't personally don't know, but maybe you guys know some of the other bubbles are driving the markets currently. So let's get back to that question. Will gold and silver rise or fall or stay the same? I didn't write that there. If the bubble bursts. I've been listening to a bunch of different what you call doomers and gloomers and economists that think gold is going to 10,000 or gold is going to 5,000. Everybody has a bunch of opinions, so I like to listen to as many of them as possible and see what their school of thought is. And for the most part, the doomers think that gold's going higher, 2,000, 3,000, silver's going to 40, 50, maybe even 500. And then there are people, there are some, not too many, just a few here and there, that think that gold will stay the same or actually go down when the bubble bursts. And I think that's very likely because that's what happened back in 2008, 2009. The real estate market, the whole thing just burst. And we had gold and silver go down when that happened. Well, right now gold is around $12.30 and silver is what, $15. So we shall see how the metals fare if we do have a burst in the bubble. Maybe there'll be a tremendous amount of shorting of metals because maybe this banking establishment doesn't want gold and silver to rise. Sell it off to the point where maybe gold goes down to 970, 975, around there, where silver will be like 12, 11 bucks. And that scares people who own metals and they start selling it, say, oh, I need the cash, metal's going down, everything's going down. I need the cash to pay off my bills, this and that, pay off, just pay my regular expenses. And then all the metals go back into inventory, and that's when the rich people buy it up, and then they say, okay, now we could let it go up, and it starts to shoot up. Maybe that will happen. Who knows? All right, so that's what I have for today. I would love to hear some of your comments, thoughts about this, and we could have a pretty good discussion. All right, thanks for watching. It's a long video, and I'll speak to you guys soon.